So let's look at passive income other than real estate. So let's back up. I'm not a CPA, I'm not an accountant, I'm not giving you tax advice. Clear that up right now. Okay, in this video, I'm gonna show you other ways that you can make passive income that doesn't include real estate, but we'll wrap it all up in a nice little bow. We've got some cool little bonuses at the very end, so stick around there. And as usual, what helps the algorithms of this, you get it, thumbs up, send it to somebody that needs to see it, and subscribe. That's what keeps us going. I appreciate that. My gratitude for everybody that's doing that. First of all, what is passive income? Passive income is something that you're working at that you don't have to do on a daily basis. You know, we talked about rental income in other videos. You're not actually doing something every single day. That's considered passive income. So let's just go through some of the list of the items that are going to be there. You've got CDs. CDs are considered a passive income. Dividends from stocks, that's considered a passive income. You've got a YouTube channel. I can do like what I'm doing right here. There's a little bit of advertising on that. I wouldn't recommend that to anybody as far as the income on that, because it's my time's worth a lot more than getting paid on that. So you've got to look at that. That could be a way to do it. Everybody's got these fascinations of, you know, something going viral on it. Print on demand businesses. You've got Amazon. So you can get an Amazon account and maybe you're selling digital product. Maybe you have inventory that they're keeping at Amazon and all you're doing is reselling that. I've heard that that's pretty good. That's considered a passive income on that. You know, silent partner or equity. So invest in a business. I could do that. I could lend money out. I could lend money to other people and they can go ahead and pay me back a small nominal amount from time to time on that. I could do that. So I could do a mobile app that could tutor people. Those are passive incomes. Now, if I tutored them up front, not gonna work. If I have a mobile app that has videos that teaches them, passive income on that whole 9 yards. So those are some of your passive incomes out there. They're great. Real estate, as far as I'm concerned, is the flagship of all of these. Why? Because it's not going anywhere. They're not making any less of it. There was an interesting, and I wish I could find this, I'm sure that now that there's Google, I do believe it was like 1969 in the finance class graduating from Berkeley. I do believe it is. You know, don't quote me on that. But a university, the commencement speaker could not make it, so they asked somebody to come in and give this speech, and it was somebody from the finance department. I think that's what it was. And they said, forget everything you learn in this university. If you really want to make money, how many people want to be a millionaire? Of course, a bunch of people raised their hands. And they said, then buy real estate, because 84% of the world is going to want to live in the United States. Boy, that they didn't miss that mark. You know, look, how many people wish you would have bought real estate 20 years ago, 10 years ago, 15 years ago, 25 years ago? There you go, right there. Okay, so getting a piece of real estate and renting it out is by far, in my opinion, one of the best passive incomes you can do out there. Not that these other things don't work. There can be some combinations, but the challenge is there is a little work when it comes to real estate, but once it gets rolling, those things kind of take care of themselves, if you will. In other words, once I get a tenant inside a piece of property, I'm good. Once I get an Airbnb up and I get the right price point and it's being rented out on a regular basis, I'm good. I don't have to do a whole lot, although there's a little more work in that than there is just a straight rental. I love rental properties because they offer that income coming in on the property. It's not a bad way to make it happen. So, you know, I look at that all the time and say to myself, why would anybody do anything differently? Plus the tax write-offs I get on it. See, I don't get to depreciate, you know, my products in Amazon and what have you, but I can depreciate the asset that I'm standing on right now. So I can sit there and say, I'm going to depreciate this over the next 27 and a half years. And the way the IRS treats this property is if I'm never going to get, it's going to go down in value. I mean, how weird is that? So I depreciate like this, like my car, I depreciate my car because that really does go down in value. Real estate doesn't. Why do they do that? Because it encourages people to do it. And there is all sorts of tax codes out there that are advantageous to the property owner. So keep that in mind. I mean, on top of that, I get to write off everything. I get to write off any costs that I've got incurred with this property, the maintenance, electricity, HOAs, if there's any on that. So some of those things are flights to get here, advertising. So plus everything becomes a business. It really does. As I'm driving around looking at property and go, hey, honey, look at that house over there. Oh, I'm conducting business, right? I mean, again, talk to your CPA and accountant what's allowable or not, but all of those are write-offs. And plus, passive income is taxed at a different level on that. Depending on how much income you make and all that good stuff, it can be relatively inexpensive on that. And also, you've got appreciation of the product. When I'm selling on Amazon or what have you, the business itself doesn't really appreciate. I guess you could argue that point, but here I have a business and the value of the business, which is the real estate, is going up in value. I just did a video on the top 10 markets to do rental properties in, and some of these have a 5-year growth pattern of 40 to 60%. That's how much the property is going to go up in value. And, I don't know, Amazon business isn't going to go that way. So you've got to look at that. So some of the ways that you can go out there and get real estate is to find a property that meets the criteria for the area that you're looking at, can cash flow, go ahead and put a chunk of change down that, go to a bank and make it happen. That's very conventional. I didn't even say it's conventional. It's very typical over the last 25 years. That's not the way it's been always done. And for some reason, people have forgotten about the real estate is done. You go out there, you get some sweat equity. So how is it that I'm going to buy a bunch of product that I instantly got all this profit in on Amazon? You can't do that on Amazon, okay? But I can buy a piece of property that's frankly a piece of crap nobody wants. So you go in there, you find that property, and I'm just going to make up some numbers. Don't argue it. Let's say I buy it for $100,000, but it's in a $250,000 area. I mean, this thing's tough. I get my dump thing, I dump all that stuff in there, I fix the property up, and guess what? It's going up to value, okay? Everything I put into that becomes a deduction into the business. Now I rent that property up. I've got all this value that's built into the property instantaneously, and I'm winning. So now I've got, let's say $2,000 a month in passive income coming. Let's say it cost me, for easy math, $1,000 to maintain that property every single month. That'd be a lot. But now I got $1,000 a month coming in passive income, whether I get out of bed or not, okay? I don't know about you, but I kind of like that strategy, okay? So there's ways to find those properties. There's an FHA program out there right now that I think you're crazy if you're a first-time home buyer and you're not taking advantage of this. It is a program for duplexes, triplexes, and fourplexes where you can buy the property, live in one of the units, and you only have to put 15.5% down. Think about that. $500,000 property somewhere in wherever, Ohio or whatever, that needs work, same, okay? And I go in there and finance it, fix that thing up, rent it out, fix the next one, move into it, fix it, go all the way down the line, you've built in equity. My favorite way, as you know I'm gonna get to, is gonna be the tax deeds. I can buy a property from the county for the back taxes. Now I've got tremendous amount of equity in that. All I'm doing is going down there and I'm finding a property. I got to find the list. I got to find out when the sale is. The county, these properties have been delinquent on their taxes for 5+ years for the minimum. And the county says, we need this money. We need it for roads, bridges, fire department, all that good stuff. And so we're notifying anybody that's got a financial interest in this property, including heirs, that we are selling it next Thursday, whatever time that is. You and I do the research on that. We do the research, boom. We find that property, we give them the money for the back taxes, and we're off to the races. Now, it sounds simple. There's a lot you need to learn before you go to an auction and put your hand up and say, I want that property. There's research, make sure no liens are attached to it. When does the list come out? When is the auction? What kind of money do they need? Guess what? You're in luck, okay? I told you I had a bonus to get you some passive income. Okay, I've got a brand new course on how to buy tax deed properties, literally from A to Z. This is probably my best work in the last 30 years of teaching people how to do this. All you got to do is click on the link down below. It is my gift to you. For doing that, I will give you an extra bonus with a handout, America's Best Kept Secrets on Investing, and I'll send that out to you complimentary, and we'll go from there. So go out there and get yourself some passive income in the best ways I know how. This is Saen Higgins saying God bless and good luck.